markets give negative returns after months of outperformance? What do you say when the benchmark index looks all set to close in red for the fourth consecutive month? A first in almost 20 years' time. So what do you say when midcaps also lose in double digits in the first 3 months of a year? It's the story. It's the story of the Nifty 50 and other small cap and mid cap indices. Interestingly, while the Nifty loves the red, the story is so different for the Dow Jones, the NASDAQ. Look at the S&P. The banks have failed in the US. They haven't failed in India. Inflation is similar in both the countries right now. In fact, the US could go in recession, but not India. We keep talking about India as a beacon of hope when it comes to the equities. So we ask, is the worst over now for the Nifty at least? Is it the best time now to enter the Indian markets? Let's ask the expert. Pankaj Murarka is the Chief Investment Officer at Renaissance Investment Managers. He's joining us on this edition of India Tonight. Pankaj, great to have you on the show with us. Do tell us how you read the continued pressure on the Nifty. 4 months back to back, we've been in the red, close to that. Why has there been such a long downtrend, according to you?
Pleasure, Vikram. Good evening to all you and all your viewers. Vikram, well, I still believe that, as you rightly said, that in a year where US economy will get into a recession, India will still deliver healthy growth. So the outlook for Indian economy in the context of global growth continues to remain pretty healthy. I would count the last 4 months moderation or somewhat decline in the Nifty index more as a consolidation in the long-term bull market, which is pretty healthy for the market as a whole. So I would not be too worried about what we've seen over the last 4 months. Obviously, we've seen that there's been a lot of volatility globally. We've seen some very large banks failing in US, and CSFB, which was a large financial institution, 150-year-old, $600 billion of balance sheet, just overnight got bought out by UBS. These are some very large events that have happened, and despite that, Indian markets, while they've corrected somewhat, but they've still held pretty well, I think, in the context of where global markets have been. So I would reckon that the outlook for Indian economy continues to remain strong. And while markets have corrected somewhat in the short term, I think that's more of a consolidation in a long-term bull market. And investors having a medium-term to long-term view should use this as an opportunity to invest for the longer term.
All right, so you see this more or less as consolidation, as a kind of correction with the kind of moves we are seeing elsewhere. But what are valuations looking like? Because Pankaj, day in and day out, I'm hearing from experts that the valuations are stretched. So in that scenario, is this a good time to invest in the markets really when valuations look that stretched?
The fact is, if you look at last 1 year, the Nifty index is almost flat. And earnings have grown in India for the corporate India or for the top Nifty 50 companies at about 15%, which effectively means today the index is 15% cheaper than what it was a year back. When you look at valuations, I think now India's valuations are very much in line with our average valuation for the last 15 years. Having said that, the fact remains that given the context of India's high growth, India is a relatively expensive market as compared to a lot of other markets in the world, because India is also the fastest growing economy in the world, and with a very strong earnings growth for Indian companies. So in that sense, relatively India will remain expensive, but going by the historical trends of India, I think valuations now are very much in line with where they have been over the last 15 years averages. So I don't think so valuations are so expensive in that sense. And these are reasonable valuations for investors willing to take a long-term view.
What do you make of investors now getting jittery, and perhaps not even jittery? They see more value elsewhere, because look at the way SIPs have stopped in recent times, and we've discussed it on the show as well. Why do you think investors are looking for more safe haven or higher investments, and those could come from FDs today as well? Why do you think they're doing it?
Well, in the short term, fixed income instruments, including FDs, can give somewhat higher returns than equities over a period of 6 months, 1 year, given the fact today we are at very close to peak of interest rate cycle. But over the medium term to long term, returns in equities will far exceed that of fixed income. And that's a history over the last 30, 40, 50 years. Go back 20 years in India, where FDs used to give 11, 12%. Even in those environments, equities has given return higher than fixed income. So when you're buying equities, you're buying growth assets. So over 2 to 3 year time horizon and longer time horizon, equities will definitely outperform fixed income instruments. Though in the short term, because markets are somewhat sideways or consolidating, it might so appear that the fixed income might be give a better return than equities, but long term that's not the case.
On interest rates, since you brought that up as well, we've seen the RBI move more or less in tandem with the Fed. Now, with future rate decisions, both by the Fed and the RBI, how do you think that's going to play out on the Nifty?
I think we are very close to peaking of interest rate cycles globally also and also in India. The fact remains that our inflation challenges today are far less complex than what the US's economy is facing, because the inflation overshoot there is far, far higher than what we've experienced in India. While inflation in India continues to remain elevated, but it's very close to the upper band of RBI's corridor. So I think our challenges or the challenges that lie ahead of RBI in that sense are far less complex than what globally they face. I think at best, my assessment, RBI might take one more rate hike and go into a pause mode. And I'll not be surprised if globally, given the kind of impending weakness that we expected in the US economy, we'll have rate cuts in US coming in late towards the end of this year. So I think that the one rate hike which probably could happen by RBI in early April when they meet, I think that's almost priced into the equity market. So I don't think so that will have an impact on Nifty index.
And what do you think the next round of corporate earnings is going to bring us? What kind of news do you expect on that count? Will that fill more positivity in the markets, you think?
Well, I think we'll have a reasonable set of earnings. Having said that, I must say that there's some sort of a short-term cyclical slowdown that's happening in the economy post the festive season, post Diwali. Last year, we've seen some sort of a consumer slowdown that has been playing out over the last few months. So I think it'll be a mixed earnings season where some of the companies, especially banks and capital goods and engineering companies, will report very strong numbers, where there could be some subdued numbers from consumer companies. But on an aggregate basis, we still think that India can do mid-teens kind of earnings growth at the corporate India level for this quarter, which is very healthy in this kind of environment, especially when we have global headwinds in terms of slowing growth globally and where export growth has slowed down.
All in all, how do you think the markets are going to move? What are going to be the triggers for the markets? And like you're saying, that there is now we are hitting peak levels as far as interest rates are concerned, keeping that in mind as well. Do tell us where you're seeing the opportunities, because these triggers are going to be important, and there are the known unknowns and there are the unknown unknowns, which is always scary. The markets don't like that kind of non-surety as far as the path ahead is concerned, and there are so many moving pieces right now. So in terms of triggers first, where do you see the Nifty moving?
So, well, we continue to remain constructive on the overall outlook for the index directionally from a one-year perspective. We still think that the index can comfortably do a mid-teens, 15% kind of a CAGR return over the next 1 year, and more importantly, over the next 3 to 5 years as well. We also need to acknowledge and appreciate the fact that in this environment where, as you rightly said, there are a lot of unknowns and there's too much of global uncertainty and volatility, India has actually emerged. There is an island of calmness in that sense, where an underlying economy is very strong. The macroeconomic indicators of the economy are fairly stable and very strong, and we have a very underlying strong financial system, which is why banks in India are completely insulated from global financial crisis or crisis that's happening in the banking sector. And corporate India is still delivering healthy growth because we have a very strong domestic economy despite sluggishness in exports. So I think a combination of strong underlying growth in the economy and probably a decline in interest rates, good monsoon, could be a couple of factors which will combine together to provide that necessary thrust or momentum to the market, probably in the second half of this calendar year. So I think this is a good time for investors really to build their portfolio because, as you rightly said, markets have corrected over the last 4-5 months, and while the index has just corrected about 6%, as you had mentioned, there's been a sharper correction in a lot of mid and small cap names because there's been a fair bit of capitulation from retail and HNI investors because there is a lack of institutional participation in some of these mid cap and small cap names, or maybe there was some leverage out there in the market which has got cleaned out in this volatility. So I think I would recommend that investors should use all of this volatility to their advantage, probably build their portfolio for a longer term perspective and use this correction to their advantage and be patient with equity. I think the outlook for Indian economy continues to remain very strong.
So is this the time to take risk and build on a broader indices kind of portfolio, because we're seeing that much more pressure as far as the mid caps and the small caps are concerned. So what would be a strategy that you would suggest if you're saying that now is a good time to enter the markets?
Well, I would strongly recommend investors if they are not themselves an expert, then certainly consult an expert financial advisor. Having said that, I would reckon that investors should build a multi-cap portfolio with probably 50 to 60% exposure to large caps because these are large companies. The good thing is in India, even the larger companies are growing at mid-teens to high teens, which is very strong growth in global context, and which can deliver very healthy returns to investors. And the good thing with large caps are they are relatively safe. And at the same time, we have a lot of great companies which are emerging companies or mid and small cap companies, which will deliver very strong growth over the next few years and over a longer period of time. Please bear in mind that a lot of large companies that exist in India today were actually mid-cap companies 10, 15, 20 years back. HDFC Bank or Infosys were mid-caps at some point of time. So if you can invest into some of these high-quality mid-cap companies, which are at the early stage of the life cycle, and stay invested in them for a long period of time, then you can really make outsized returns. And those kind of opportunities exist in India in abundance because the overall ecosystem is growing very strongly. So I would advise investors to build a portfolio which is actually a combination of large caps, which give healthy returns with stability and safety to the portfolio, and with some exposure to mid and small cap, which can give much higher returns.
All right, Pankaj Murarka, we'll keep watching the situation on the Nifty and, of course, what happens in the broader markets as well. Is this the time to take risk and dip into the broader indices, or perhaps look at more safer options? That's something else that we'll keep asking our experts. But Pankaj, many thanks for joining us on India Tonight. Meanwhile,